SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. The date is 1/11/16, and lots of interesting things happened last week, carrying over to this week. The question is it time to go take advantage of overseas bargains, take that long-awaited trip to Europe, and maybe buy that foreign car? Well, John Rubino, you are with us now to answer those crucial questions.
Hey, Kerry. Yeah, what a boring world we live in, you know? Nothing interesting ever happens anymore.
No, nothing.
Yeah. Well, last week was the worst start to a year for the stock market ever. And that's for U.S. stocks. And we were actually kind of a success story, relatively speaking, because the rest of the world was down even more. You know, U.S. stocks fell about 6%. But China and Japan and Germany and Hong Kong and most other countries were actually even worse. So basically, it was a global panic for 1 week there to start the new year. And so now the question is, does this keep up? You know, are we going to tip over into a 2008, 2009 style crisis? Or was that just kind of an anxiety spasm that we will get over? And it's not clear, because Chinese stocks tanked again last night. And oil is down another buck a barrel to an average of $32 a barrel, which is the low for the past 12 years. Oil right now is even lower than at the bottom of the 2008-2009 crisis. And it doesn't really show any signs of easing, because the supply-demand situation continues to be imbalanced. And there's still more oil flowing into what's left of the storage capacity out there than is flowing out. And so we're filling up the storage capacity. So we're liable to have another hard break in the oil price down into the 20s, unless this gets fixed in a hurry, which would further destabilize the global financial system. So there's a lot going on out there that points towards more instability going forward. And yet the U.S. stock market is not behaving unstably this morning. You know, it's kind of flat to down slightly. So we'll see. But that was a very exciting week for the shorts out there. You know, it's been a hard time to be betting against this market for the past 3 or 4 years, in part because everything kind of went up together. It didn't matter how financially strong or weak a company was. You kind of had a consistent bull market for 3 or 4 years, because the government was basically just shoveling cash into the financial system, and it was flowing almost indiscriminately into various sectors and the strongest and weakest stocks within sectors. And that changed in 2015, when you saw the market kind of differentiate for the first time between weak companies and strong companies. And so during the course of 2015, a few companies held up really well. The FANGs stocks in part, and then a few others. And the vast bulk of stocks started to fall. And towards the end, it was a great time to be a short. You know, you could bet against all kinds of big, unstable looking names. And where 2 years ago you would have gotten killed, now you're making a fortune. And so I think that was the biggest change from the point of view of an investor in 2015. And now it's accelerating. You know, the weak companies are getting weaker, and the strong ones are holding up, but falling a little bit. So if the strong companies roll over, in other words, if big tech and a few of the other rock solid companies that people were talking about as dividend plays and one decision stocks and just buy them and put them away last year, if they roll over, then all bets are off. You know, this market will crack at least another 10% in the U.S. and maybe quite a bit more elsewhere. And we'll see a good old-fashioned bear market, which is something that a lot of Wall Streeters have never seen in their careers, because it hasn't happened for 6 or 7 years.
Yeah, well, it's like the Nifty 50 during the 60s. One decision stocks, buy them, hold them, and life is great, like Xerox and like so many
Polaroid
other stocks, IBM.
Yeah. These names that you don't really think of as great investments anymore. But and They definitely were not great investments. Once the term Nifty 50 was coined, that was kind of the death knell for that concept. And same thing probably with the FANG stocks. By the time they become a thing, that means that a lot of the buying has been done already, and that it's ready for a turnaround where the valuations are out of whack and they have to be brought back into line. So that's where Chinese stocks were a year or two ago, and that's where a lot of big brand name U.S. stocks are now, I think.
Yeah. Well, everything that's old is new again, and everything that's new is old again. And,
well, what doesn't change in the stock market is human nature. We're excitable.
Yes.
So, either we're over enthusiastic or we're desperately pessimistic. And that's how you tell whether it's time to buy or sell. So the over enthusiasm has been building for a few years as easy money left a lot of capital with nowhere else to go, because government bonds were basically as high as they can get, yielding next to nothing. And real estate was illiquid and extremely expensive in trophy markets. So that just left blue chip stocks. And so that for a year or so became the safe haven of last resort. And that never works in the end. So we're seeing that happen now. And
Correct.
one of the really interesting parts of this is China, because they were sort of the growth stock of the national market world for a long time there. For 4 or 5 years, they were growing like crazy, and it looked like they figured it out. The top down,
the code,
managed economy kind of system once again looked like it worked. And that's also part of the pattern. We have these authoritarian countries that bubble up and start directing resources from the top and growing really quickly for a while. Like the Soviet Union in the 1920s, we had Americans coming back from visiting the Soviet Union and saying, I've seen the future and it works. Because at first, when companies are able to access capital and then direct it, you get lots of growth. But it's only later that you find out that growth was really misdirected, that it was malinvestment, and then it blows up on them. So first it was the Soviet Union, and then in the middle of the century it was Japan who did the same thing. The Ministry of International Trade and Investment was directing the big Japanese companies and the big banks to invest in various industries, and those industries grew like crazy for a while, but they grew at the cost of lots of new debt. And when that debt blew up on them, you get the zombie country that Japan has become, where they keep borrowing more and more money, but they really don't grow. And so they're kind of in the death throes of a process that really began back in the 1960s. And now China's the latest example of that. They borrowed huge amounts of money and politically directed it to building airports and roads and bridges and whole new cities. And a lot of those things didn't work out. They're having to demolish entire apartment buildings and office buildings that were built, and they're beautiful, but they were never inhabited. And so you reach a point, if a building hasn't been inhabited for a certain number of years, that it's uninhabitable and you have to demolish it. Well, they're having to do that now. So all that money was wasted. And that's showing up in the turmoil in their markets right now. And then the government is responding to that turmoil as if they don't really understand what they created. They don't know how markets work. So they're responding to, for instance, bear markets by going in and prosecuting people who sold, or just banning the selling of large stock positions, and various other things. And that shows that they don't understand markets and should be contributing to the nervousness in the Chinese markets. Because why would you invest in a place where if things go wrong, they tell you can't sell? You're just locked into your position for however long it takes for the markets to settle at a decent valuation level, which means that could be a lot lower than what you paid, and you can't get out in the meantime. So China is in the process of joining Japan and Russia as examples of failed managed economies. And that doesn't mean that they won't be a completely viable economy at some point going forward. It just means they have to go through the transition from a system where everybody thinks the guys in charge are the smartest people in the world, and they can actually manage a complex economy.
Yeah.
And find out that we have to find out that that's not the case, and then China has to evolve into something that actually has trustworthy market mechanisms and the rule of law and sanctity of contracts, before it becomes a viable capitalist economy. So meanwhile, while these authoritarian countries are rising and falling, the relatively capitalist economies, like the US still kind of sort of is, tend to be able to adapt to hard times and to emerge in reasonably good shape, relatively good shape, compared to the authoritarian economies. But unfortunately, we're becoming an authoritarian economy as the Fed and the Treasury manipulate all the various markets in the US. And so we're destroying trust in the same way that China and Japan did. And so we're going to pay the same price at some point. But in the meantime, we've got Silicon Valley and a few other pockets of innovation that allow at least a few big U.S. companies to grow globally and to be consequential and to generate wealth. And so we're at least in better shape than China and Japan. But we won't be in good shape going forward unless we just get out of these markets and let them clear and let them price things in a transparent way, which is what we're not doing now.
Let them flush it out already. I mean, it's ridiculous because you can't, as these authoritarian regimes are finding out, John, you can't support the unsupportable. There's just no way that you can do that indefinitely. And China blew through a lot of their foreign reserves last year, like 569 billion, I read. And what's to think they're not going to keep doing it at the rate they're going? I mean, let's face it, just there's a limit to what the market can sustain here, how long it can be propped up, and then financial reality is always going to assert itself.
Well, that was one of the reasons that people were so optimistic about China being able to get through a crisis. They had $3.5 or so trillion of foreign exchange reserves. Well, like you said, in the space of 1 year of currency turmoil, they have blown through a big chunk of that. And another couple of years, like the last year, and they will basically run out of money. And so this cushion that we thought they had is turning out to be a lot thinner and lumpier than it seemed.
It's turned into a jailhouse mattress, this cushion, right? I mean, you can go through, when you don't have money coming in and you're only paying money out, you can blow through a lot of money really quickly and not even know what happened. And I think that's the situation they're in, John.
Yeah, they're basically trying to support a system that is so over indebted and with a currency that is so overvalued that it really can't be done. They can throw all their money at an overvalued currency and it'll still be overvalued at the end of the day and still have to be devalued. So now the big prediction out there is a 10 to 15% immediate devaluation of the yuan by China, which would be interesting to watch if it happens, because that's a currency that is just now emerging as a global trade currency and to a lesser extent, a reserve currency. It's being added to the SDR basket by the IMF. And there's a lot of bilateral trade going on now in yuan. And that, which is as it should be, because China is the second biggest economy. So their currency ought to be one of the major currencies in the world for trade and for savings. But if just as that's happening, they do a really sharp devaluation. It's not clear what that means.
Undermine
but it certainly means that we won't trust them for a while after that.
It's going to undermine their people's your confidence in that currency, which was going to become the global reserve currency. Let's face it, that's what everyone, all of you believed it was going to happen. Me too. And it might very well happen, but not right now. It's not. That's for sure.
They have to get through this process of transitioning from a command and control economy, which didn't work, seemed like it was working, but didn't work, to a market-based economy. And that's really alien and disturbing for the guys in charge because they clearly didn't know how markets worked when they were beginning that transition. And so now they have to decide whether they're going to basically let it happen, step back and allow these market forces to work out, even though they're going to work out in a very chaotic way from here, or step in and try to control it, continue to direct investment and invite people to buy stocks, yet not allow them to do things that might make the market go down. That's something that if they try it will fail miserably over the next couple of years. But it looks like they're kind of leaning that way because they're very disturbed by the way markets play out. The clearing mechanism that lets things go down until there's a reasonable price that matches the value of the asset. That's messy. They don't like that.
Well, let's take a look at the American election. Trump threatening tariffs on China. If they don't do this, they don't do that. And, World War II and our confrontation with Japan was at least somewhat related to tariffs and trade and elbowing them. Is this going to cause a war here? I don't know. But the stronger Trump gets, the weaker the Chinese economy starts looking here, John, Well,
financial crises tend to lead to trade issues where everybody starts trying to protect themselves because they're desperate, which in turn tends to lead towards geopolitical trouble. Because if somebody slaps a big tariff on your only successful export industry, then you consider that almost an act of war. You're going to retaliate, blah, blah, blah. And so that no doubt contributed to World War II in the 1930s when we started putting tariffs on each other's export industries. Now, whether that happens that way this time is anybody's guess, but that's sort of the way it usually goes. And we're already seeing it now. I mean, geopolitically, the world is just about as crazy as it has been since the Vietnam War and maybe all the way back to World War II. The Middle East is completely on fire right now with no obvious solution. And especially if Saudi Arabia and Iran step up from here, they've already got a proxy war going and they've already broken diplomatic relations. So the next step is flat out shooting war between their actual armies and air forces. And we're not far from that. And that would send the Middle East into absolute chaos. And then you've got Europe.
Oh, yeah.
Almost literally in flames now. The stuff that happened in New Year's during the New Year's celebrations in Germany really throw a wrench into a lot of Europe's border issues and the free movement of people across borders in the EU borders. And whether Britain even stays in the EU. A lot of that's up in the air right now. Yeah. And most of the things that seem to be happening argue against the viability of the euro going forward, because if you don't have a unified market, how can you have one coherent currency? And so Europe's very much in danger. Oh, and the separatist party just took power in Catalonia in Spain, right. And they would pull themselves out of the eurozone if they have their way. So when you see smaller entities pulling out of a currency union, and then that questions the viability of the currency. And so Europe's got that issue to deal with going forward, which could easily turn into some kind of geopolitical thing, as they have to devalue the euro really aggressively in order to keep people in. And that causes a trade war with the US and Japan. These scenarios were crazy sounding 2 years ago, and now they're pretty reasonable possibilities in 2016.
Yeah. Oh, yeah. I mean, there is just so much going on. You really can't keep track of it, which is why you need to go over to dollarcollapse.com, find out. And don't forget, listen to John's podcast. You find a link on financialsurvivalnetwork.com. We proudly produce it for John. And hey, you just have to keep your eyes open because you don't know where the next shock is coming from. But one thing you can be certain, it is coming. John, hey, we'll talk to you again next week. Keep the podcast coming. Cross your fingers and buckle your seatbelt.
Yeah, will do, Kerry. Talk to you next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.